There are 12 people you've never heard of who control more wealth and power than every government on Earth combined. Not politicians, not tech billionaires, not oil sheiks. 12 central bankers who meet in secret, make decisions that affect billions of lives, and answer to no one. No elections, no oversight, no accountability. They control the flow of money itself, and most people don't even know they exist. These 12 individuals sit on the board of the Bank for International Settlements, the BIS, the central bank for central banks. When the Federal Reserve, the European Central Bank, the Bank of England, the Bank of Japan, or any of the world's major central banks need to coordinate policy, they do it through the BIS. And the BIS operates above national laws. Its meetings are secret, its transactions are hidden, its decisions shape the global economy, and you have no vote in any of it. This isn't conspiracy theory, this is documented fact. The BIS was created in 1930, and for nearly a century it has been the most powerful financial institution on Earth. It survived the Great Depression. It operated throughout World War II, facilitating transactions between Allied and Axis powers simultaneously. It shaped the Bretton Woods system that established dollar dominance, and today it coordinates monetary policy for the entire developed world. The 12 people on the BIS board represent the central banks of the United States, the Eurozone, the United Kingdom, Switzerland, Japan, China, Mexico, India, Brazil, and a few rotating members. These aren't elected officials, they're appointed by their respective central banks, which are themselves either fully private institutions or quasi-governmental entities with minimal democratic oversight. Jerome Powell from the Federal Reserve, Christine Lagarde from the European Central Bank, Andrew Bailey from the Bank of England. These are the faces you might recognize, but there are others whose names never appear in headlines, yet who wield equal power. And here's what makes this structure so dangerous. Central banks are supposed to serve their domestic economies. The Federal Reserve is supposed to prioritize American economic stability. The European Central Bank is supposed to serve European interests. But when these central banks coordinate through the BIS, whose interests are they actually serving? Not yours, not your country's. They're serving the global financial system itself, which means they're serving the largest banks and financial institutions that depend on that system. Let's start with how the BIS was actually created, because the origin story reveals exactly what this institution was designed to do. In 1930, the Treaty of Versailles reparations system was collapsing. Germany owed massive debts to Britain and France from World War I. Britain and France owed massive debts to the United States. The entire structure was unraveling. American banks that had loaned billions to Germany were facing defaults. European governments couldn't collect reparations. The international debt system was in crisis. The solution wasn't to forgive the debts or restructure them fairly. The solution was to create a new institution that would manage these debt flows permanently, insulating them from democratic pressures and political changes. The Bank for International Settlements was established in Basel, Switzerland, specifically to handle German reparation payments. But its real purpose was to create a permanent mechanism for international debt management controlled by bankers, not governments. The BIS was granted extraordinary privileges from the beginning. Its headquarters in Basel was declared sovereign territory. Swiss law did not apply inside the BIS building. The institution and its employees were immune from prosecution. Its archives and communications were protected from any government seizure or surveillance. And most importantly, its financial transactions were completely confidential. No government could audit the BIS. No parliament could investigate it. No court could compel it to reveal its activities. These weren't accidental provisions. These were deliberate choices made to create an institution that operated above national sovereignty. And the architects of the BIS were very clear about why this was necessary. They believed that democratic governments couldn't be trusted with monetary policy because politicians would always choose short-term popularity over long-term financial stability. They believed that monetary policy needed to be removed from political control and placed in the hands of technical experts who understood finance. In other words, they believed that bankers should control money, not elected representatives. And here's the crucial detail that most people miss. The BIS is owned by its member central banks, but many of those central banks are themselves privately owned or controlled. The Federal Reserve is a private banking cartel owned by member banks. The Bank of England was privately owned until 1946. The Reichsbank in Germany had significant private ownership until after World War II. So when the BIS was created, it was essentially a private institution owned by other private institutions, all coordinating to control the global money supply.
During World War II, the BIS did something that should have destroyed its credibility forever, but somehow didn't. It continued operating as a financial clearinghouse for both Allied and Axis powers simultaneously. American, British, German, and Italian central bankers sat together at BIS meetings in neutral Switzerland while their countries were slaughtering each other on battlefields. The BIS facilitated the transfer of Nazi gold, including gold looted from conquered nations and gold extracted from Holocaust victims. Tons of gold passed through BIS accounts, converted into currency that Nazi Germany used to purchase supplies and continue the war. This wasn't an oversight. This wasn't a mistake. This was the BIS functioning exactly as designed, as an institution that prioritized financial relationships over national loyalties, over moral considerations, over human life itself. Thomas McKittrick, the American president of the BIS during the war, maintained relationships with Nazi officials throughout the conflict. He traveled to meetings in Switzerland where he coordinated with Reichsbank officials. And after the war, he faced no consequences. The BIS faced no consequences. The institution was too important to the international financial system to be disrupted by questions about its wartime collaboration. When the Bretton Woods Conference redesigned the global monetary system in 1944, there was actually a proposal to abolish the BIS because of its Nazi collaboration. The proposal was supported by some delegates who understood what the BIS had done, but the proposal failed. The BIS survived because the major central banks wanted it to survive. They wanted an institution that operated above national control, that could coordinate policies secretly, that answered to no democratic authority. The BIS gave them that, and they weren't willing to give it up just because it had helped finance Nazi Germany. So the BIS continued operating after the war with barely any interruption. It played a key role in managing the Marshall Plan loans that rebuilt Europe. It coordinated European monetary integration that eventually led to the euro. It facilitated the petrodollar system that maintained dollar dominance after the gold standard ended in 1971. Every major development in international finance since 1930 has involved the BIS, usually working behind the scenes where the public couldn't see. But here's where the BIS becomes truly dangerous in the modern era. In the 1980s and 1990s, the BIS began setting international banking standards through the Basel Committee on Banking Supervision. These are the Basel Accords, Basel I, Basel II, Basel III. They establish the rules for how much capital banks must hold, how much risk they can take, how they calculate their balance sheets. Every major bank in the world must comply with Basel standards. And here's the problem. The Basel Committee is not a government body. It has no legal authority. It cannot pass laws. Yet its standards are enforced as if they were laws because central banks adopt them and require their domestic banks to comply. So you have an unelected committee operating out of Basel, Switzerland, setting binding rules for the entire global banking system, rules that determine who can get loans, how much businesses can borrow, what investments are allowed. Basically, the rules that control the flow of credit through the entire economy. The 12 people on the BIS board can coordinate monetary policy in ways that are impossible through normal diplomatic channels. When the 2008 financial crisis hit, central banks coordinated their response through the BIS. Interest rate cuts, liquidity injections, quantitative easing programs, all of this was coordinated in Basel. The meetings were secret, the discussions were confidential, no transcripts were published, but decisions affecting trillions of dollars and billions of people were made in those rooms. The same thing happened during the COVID crisis in 2020. Central banks around the world implemented nearly identical monetary policies within weeks of each other. Massive money printing, interest rates slashed to zero, asset purchase programs. This wasn't coincidence, this was coordination, and the coordination happened through the BIS. Now you might think coordination is good. Maybe it makes sense for central banks to work together during crises. But here's the question nobody asks. Who benefits from this coordination? When every central bank implements the same policies simultaneously, who wins and who loses? The answer is that the largest financial institutions win. Global banks with operations in multiple countries benefit enormously when monetary policy is synchronized. It reduces their risk. It allows them to leverage their positions across borders. It makes the world safe for international banking. But ordinary people suffer. When every central bank prints money simultaneously, inflation becomes global. Your savings lose purchasing power everywhere, not just in your own country. When every central bank keeps interest rates near zero, savers are punished globally. Retirees who depend on interest income are impoverished everywhere. The coordination benefits the banks while harming the populations those banks are supposed to serve. And here's the mechanism through which the BIS exerts control. The BIS provides banking services to central banks. It holds their reserves. It facilitates their foreign exchange transactions. It provides a venue for currency swaps. This makes central banks dependent on the BIS for technical operations, and that dependence creates influence. The BIS can shape central bank behavior not through formal authority, but through the relationships and dependencies it creates. The BIS also functions as a research institution, producing reports and analysis that shape how central bankers think about monetary policy. The Basel-based economists publish papers arguing for certain approaches. Those papers influence central bank staff. Central bank staff brief their governors. Governors make policy decisions. The BIS shapes the intellectual framework within which monetary policy operates, and most people have no idea this is happening. The composition of the BIS board tells you everything about who really controls global finance. The United States has one seat. The Eurozone has one seat. But the Eurozone represents 19 countries. So Germany, France, Italy, Spain, and 15 other nations share one vote, while Switzerland, a country of 8 million people, has its own seat. Why? Because Switzerland hosts the BIS, and Swiss banking interests have always held disproportionate power in international finance. China has a seat, but China's central bank is directly controlled by the Chinese Communist Party. The People's Bank of China doesn't even pretend to be independent. It implements whatever policy the party directs. Yet this institution sits on the board that supposedly represents independent central banking. Russia had a seat until recently, when it was suspended after the invasion of Ukraine. But for decades, Russian central bankers sat in meetings with Western counterparts, coordinating policies, even as their governments were geopolitical rivals. The absurdity of this system becomes clear when you realize that monetary policy, the control of money supply and interest rates, is the most powerful economic policy tool governments possess. It affects employment, inflation, asset prices, wealth distribution, basically everything that matters economically. And we've handed control of this tool to 12 unelected individuals who meet in secret and answer to no one. Democratic governments can't even audit the BIS. The U.S. Congress has no oversight authority. The European Parliament can't investigate. The Bank of England reports to Parliament, but the BIS doesn't report to the Bank of England's overseers. It's a matryoshka doll of unaccountability. Central banks have minimal democratic oversight, and the BIS, which coordinates central banks, has zero democratic oversight. The BIS also plays a crucial role in the SWIFT system, the network that banks use to transfer money internationally. When the United States and Europe wanted to sanction Russia, they cut Russian banks off from SWIFT. That decision wasn't made by elected officials alone. It required coordination through institutions like the BIS that manage the technical infrastructure of international finance. The BIS didn't make the decision, but it provided the framework that made the decision possible. And this reveals something crucial about modern power. Real power isn't exercised through armies or governments anymore. It's exercised through control of financial infrastructure. The institutions that manage payment systems, that clear international transactions, that set banking standards, these institutions have more practical power than most governments, and they're all connected through the BIS. Here's a specific example of how this works. In 2010, European governments faced a sovereign debt crisis. Greece, Ireland, Portugal, Spain, Italy, all were struggling with unsustainable debt loads. The European Central Bank coordinated with the IMF and European governments to implement bailout programs. But the real coordination happened through meetings where central bankers from the ECB, the Federal Reserve, the Bank of England, and others discussed how to prevent contagion. The bailout programs required brutal austerity. Pensions were cut, public services were slashed, unemployment soared, entire countries were impoverished. But the banks that had made bad loans to these governments were made whole. They were repaid in full. The people suffered, the banks profited, and the decisions that produced this outcome were made in rooms where ordinary citizens had no representation.
The BIS publishes an annual report, and if you read these reports carefully, you can see the world view of the people who control global finance. They worry about inflation, but only sometimes. They worry about asset bubbles, but they never prevent them. They worry about moral hazard, but they always bail out banks. They worry about government debt, but they never worry about private debt until it's too late. The pattern is consistent. Policies that benefit financial institutions are implemented. Policies that would constrain financial institutions are avoided. And here's the most disturbing part. The 12 people on the BIS board are not evil geniuses. They're not cartoon villains plotting world domination. They're technocrats who genuinely believe they're doing the right thing. They believe that maintaining financial stability requires coordination. They believe that central bank independence protects economies from political manipulation. They believe that their expertise justifies their power. But good intentions don't make undemocratic power acceptable. The fact that these 12 people believe they're serving the greater good doesn't change the reality that they wield enormous power without accountability. They make decisions that affect your life, your savings, your job prospects, your ability to buy a home, and you have zero input into those decisions. The current system was designed after the failures of the Great Depression and World War II. The idea was that technocratic coordination could prevent future catastrophes. And maybe in the 1940s, when the international financial system was being rebuilt from scratch, there was a logic to this approach. But it's 2025 now. We've had 80 years of this system, and what do we have to show for it? We've had multiple financial crises, 1987, 1997, 2008, 2020. Each one required massive interventions by central banks, coordinated through the BIS. Each one resulted in wealth being transferred from ordinary people to financial institutions. Each one concentrated more power in the hands of the same 12 individuals who were supposed to be preventing these crises. The system clearly doesn't work, or more accurately, it works exactly as designed. It protects banks, it maintains the flow of credit, it prevents the complete collapse of the international financial system. But it does all of this by transferring risk and cost to ordinary people while transferring profit and power to financial institutions. So what's the alternative? Can we have a global economy without some form of international financial coordination? Maybe not, but we can certainly have coordination that's more democratic, more transparent, and more accountable. We could require that BIS meetings be public. We could require that transcripts be published. We could give national parliaments oversight authority over their central banks' participation in BIS activities. We could require that major policy decisions be subject to democratic approval. None of this will happen because the people who benefit from the current system have no incentive to change it. The 12 people on the BIS board have power they would never have in a democratic system. The banks they represent profit enormously from the current arrangements, and ordinary people, the ones who pay the cost, don't even know the system exists. That's the genius of the whole setup. The most powerful financial institution in the world operates in complete obscurity. Most people have never heard of the Bank for International Settlements. They don't know that 12 unelected individuals coordinate global monetary policy. They don't know that their central bank answers to an international institution that answers to no one. The invisibility is the point. Power that can't be seen can't be challenged. The next time you hear about interest rates changing, about inflation concerns, about financial instability, about the need for central bank action, remember this: those decisions aren't being made by your elected government. They're being made in Basel, Switzerland, by 12 people you've never heard of, in meetings you can't attend, based on discussions you'll never read. They control the money supply. They control credit. They control the flow of wealth through the global economy. And in the end, that's the same thing.